Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there and names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back.
Hey everyone, welcome back to the channel. So the Fed is actually looking to cut interest rates, and I do believe that there will be a rate cut come September. A lot of investors, a lot of bankers are basically saying that there's a 100% chance that the Fed cuts rates in September. Now, some people are saying it should be a 50 base point reduction. Most people believe it will be a 25 base point reduction. I am of the mindset that it will at least be a 25 base point reduction, and here's why. A lot of people are really trying to overinflate what is happening with the market in order to ensure that there is a higher chance that the rate cut is bigger and better than what is being expected, right? So if everyone is saying 25 basis points and we get 10, now that's an issue. But if people are starting to yell for 50 basis points, now the Fed might be more comfortable with that 25 basis point. Because knowing me, I like to be unpredictable. I don't want to be someone that is easily predicted. And so if someone says you're going to do X, Y, and Z, if that is not the only route to success, I might go with A, B, C instead, because I want to be someone who cannot be calculated, right? In business, you don't want to be calculated, and in some things, you don't want to be calculated, right? And so the Fed is looking at it like, if people are trying to predict the markets, if people are trying to predict what we're doing here in order to curb inflation, it might not be in our best interest, right? So we see the stock market going down in value when higher rates were staying there for longer, because we also understand that there are going to be better high yield savings accounts. Right now, we're still getting 5% in high yield savings accounts. There are also going to be better government bonds. When inflation is high, government bonds are also high. There's also going to be Series I bonds that are higher than expected, right? And so when we're in an inflationary environment, these Series I bonds are going to be more lucrative than they would be in non-inflationary times. So the Fed is looking at all the data, and really what is making them pivot a little earlier before 2% inflation is because of the job loss. We're losing jobs in the market. We've also lost over 1 million jobs, and the unemployment rate is over 4%. That's not including those who may have quit their job and are not able to find work. That's not including those who are trying to get back into the workforce and now seeking employment. That's not including those who have been being told that they're going to be laid off and offered severance packages or offered education in order to learn a new skill to find new work. And so we can expect that really there's not much hiring going on, that there are going to be more people losing their jobs in the future for the next 5 to 6 months, right? And so with inflation coming down or cooling, the Fed is now looking to pivot, because they know with these higher rates, people can't necessarily afford, businesses can't necessarily afford to take additional body counts and try and, spur their business growth. Right now, they're just trying to stay afloat. They're trying to maintain. And so I honestly do believe that with a 50 basis point reduction, it would benefit the economy more than hurt it. And I think that it would give the Fed a little bit of wiggle room to say, let's see how this plays out. Let's see if, businesses can bounce back or maintain a little bit longer now that the rate has dropped a bit, and now that lending is a little bit more affordable than it was before. But without a 50 point reduction, businesses are still going to have to lend at about 25 basis point reduction, and that's not going to be good enough for most businesses, to be honest with you, right? People are losing their jobs, which means there's less traffic coming to these businesses, which means there needs to be a reduction in staff, which means more people will lose their jobs, which means there will be a higher reduction in businesses, which means staff can also be trimmed that much more, or they'll start cutting things like other costs. For example, if you're a restaurant, you're getting less traffic, you're buying less food, especially perishable items. You're trying to conserve things as best as you can. There's a lot of restaurants now that are opting in for automatic lights, which means they'll switch on and off depending on movement, which is to conserve energy if there's no one, in those areas. So I say all that to say, I believe that there will be a 25 basis point reduction. I do not think it's enough. And I do believe that the Fed is going to lower rates again in December. Will it be an additional 25 basis points? That I do not know. But what I do know is that we should at least see 25 basis points in September. And that has sparked the stock market to actually go up in value recently. So now people are looking at the stock market and they're saying, oh, now is a good time to get in because the high yield savings accounts will soon go down. And I want to get in now before everything starts going up in value, right? So we don't want to assume that the stock market is going to remain low or get lower when we already know that the Fed is looking to make a pivot to cut rates. We want to get into the stock market now so that we're ahead of all the excess cash flow from the high yield savings accounts and from all these other sections where people were maintaining and growing their money to now back into the stock market on top of your money because you got there first. You were early to the market and you started to put your money where your mouth is. You started to invest, right? And so when I was showing my stock market portfolio just recently, I was showing, I think, 11%, 18% returns. Now, all you're going to hear in the news for the next couple of days is stock market rally, stock market rally, stock market rally. And why is that? Is because there is a cool down in the rates and people are looking to shift their money back into assets that are going to grow higher than the interest rate that you would get in a Series I bond or a certificate of deposit. And so with that being said, there's definitely going to be a shift into the stock market. And when I tell you this now, just know when the news starts coming out with a new stock market high, just know that your boy over here is investing for the future and he's getting to that bag, okay? I do expect to probably get into January with like a 30% return, which is what I normally average, like 30 to 38% returns year over year. And so people are always shocked when I say this, but like when you understand money, when you understand finance, it's so easy. I think the lowest return I've ever had year over year was like a 28% return. And so yes, people will be getting into the markets in September, October, November. There'll be a little bit of pullback in December, as there always is, because, you know, people got to shop for Christmas. And those who are not really active investors, they tend to pull their money out during December for Christmas. And then where do we start to see the growth in the market? Back in May and June. Why? Is because everybody got their tax returns and they're starting to pour that money back in. And that's why I love to invest December, January, February, as much as I possibly can to start the year off right and get the most of that year by putting my money in that early on, right before everyone else gets their taxes. We save all year so that we can invest at opportune times instead of investing when everybody else does. And that's what really makes us profitable. They say don't time the market, but it's so easy. It's been so easy for me. And I'm not telling everybody to use this strategy. I'm just telling you what I personally have done And that what has been working for me for the last 6 to 8 years. I think it's been about 10 years now, actually. No, about 9 years now that I've been doing this. And so, it works absolutely for me, and it makes sense. It makes sense people pull out in December for Christmas. Not everybody, just those who are not really experienced investors. And then it also makes sense that people add money during tax season because everybody wants to be rich. And so when you got extra cash, you put a little bit in the market, which is respectable and understood and understandable. And even if you invest May and June, you're probably going to make a profit also because, listen, everybody's investing at the same time. So as long as you buy something of value, a blue chip stock, an emerging stock that is showing growth, has great projections, is good in the news cycles, is trying to innovate and be better, then of course you're going to make some cash. And what I need to focus on more than anything is the emerging markets. I need to start looking at stocks that are emerging, companies that are newer, that are looking to innovate and grow. A lot of people are invested in Ozempic. For me personally, I think that the hype has already been hyped, and I don't necessarily see Ozempic being bigger than it is. Let me actually look at the stock for Ozempic and see where we're at with that, because I do believe that there will be regulations in place very soon that will curve, the ability for Ozempic to do what it does. So Ozempic is actually going to be, let me see. Ozempic stock symbol, let's see. It's showing as NVO. It must be owned by Novo Nordics. And so it's at $135 a share and 10 cents at the making of this video. It has been as high as $148.15 a share and as low as 86. So I mean, if you got in at maybe $90 a share, you're probably making about $45 right now per share. 10 shares of that is only $100. 10 shares of that would have been only $900. To make an additional $400, you would have been at $1,500 on that account easily. $9,000 of that, now you're talking maybe four grand. So yeah, it's a great stock right now. Does it pay a dividend? I wasn't even intending to do this, but now that I'm already on here, let me see if it pays a dividend. It does have a dividend. Dividend is about 51 cents per share. So imagine buying it at $90, less than $100, and getting 51 cents per share. That's the type of company that I actually like. I'm actually considering this now. And it's kind of in that middle range. It's not at the 148 high, but it's also not at the low, which is 86 for the year. I'm going to have to do some research. I'm going to actually keep this tab open for myself, see what's going on, see what they're trying to do, because Ozempic does have a lot of competition. They do have Wegovy. They do have Zepbound. They do have, what's the other one called? There's so many new, diabetic drugs that are being used for weight loss. And I'm just looking at one of the studies that came out August 20th that says Ozempic and Wegovy used among patients with depression needs more scrutiny, researchers say. So, these are the type of news that gets covered, bad publicity that comes out that might affect the stock in a negative way, especially when everyone's on this mental health craze. And because it's so new, right, we've heard all the positive things about the weight loss. We haven't started to hear some of the negative things because it is medication and there are side effects. So, if someone is betting on Ozempic actually going down in value, that might turn out to be an amazing leverage play. But like I tell people, do not do options trades. Do not bet on stocks. If you're going to invest, then you're buying that company and you're holding that company. But to basically prey on the business's downfall, I really don't see that coming, because regardless of the side effects, I do think that people are still going to want to purchase the medication in order to lose weight, or their doctor might recommend it for diabetic purposes. So with that being said, let's get back to the main focus at hand, which is the Fed cutting rates. And, sorry to take that detour, but if you guys are here for the stock market news, if you guys are here to learn more about stocks and how I invest, this is kind of what I look at. Ozempic looks like a really, really good buy right now, to be honest with you. But like I said, I do need to do more research on the negatives and see if that is going to impact my decision in any way. $135 a share now to get 51 cents per dividend. And I already missed the dividend X date, which was August 16th. So, I mean, that I'll have to definitely look at. They have a 601 billion market cap. So that's definitely something to consider. But, I'm sure that there are more companies that are less leveraged, prime for growth, maybe undervalued right now, where Ozempic, I think, is not being undervalued at all. I think that they're pretty hefty in their position. And I wonder, how far can this stock really go? Like, how far can Ozempic actually go? I don't really think it's a $300 stock. It's not a Netflix, right? The whole world is not going to want Ozempic. So where do you stop with the evaluation? Where do you stop with Ozempic? It's one drug that everyone is infatuated with. How is it going to improve? And so those are the type of things that I think about as well. But yes, people are losing jobs. Not everybody can work for Wegovy and Ozempic corporations. And because of this, the Fed is needing to pivot. This is going to lower rates. This is going to allow real estate to be a little bit more accessible to the public. But those who are already struggling will continue to struggle. This one rate cut is not going to change things for everyone. But those who have money, those who are active investors, those who are getting to that bag, as you would say, they're going to do just fine. They're going to be welcoming of this rate cut, and they're going to be ready to strike while the iron is hot. They're going to be ready to strike while there's less competition in the markets. So if you like this video, make sure you leave a like, comment, and subscribe to the channel. I post every single day at 8 a.m. daily on YouTube, Rumble, and now on Spotify podcasts. And if you like this video again, let me know in the comment section down below. I really would appreciate it. Peace.